US new home sales beat expectations. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of Heise Says US. Grab your stein of coffee, we're going to have a look at an article from Reuters discussing US new home sales and how, well, they beat expectations, everyone. So US new home sales beat expectations. Supply is at a near 13-year high, everyone. So that's, that's different to how we're seeing it here in Australia. So, sales of new US single-family homes increased for a second straight month in August, but demand for housing has probably peaked after a COVID-19 pandemic-fueled buying frenzy. The report from the Commerce Department on Friday also showed the supply of new homes on the market last month was the largest in nearly 13 years, with prices unchanged on a monthly basis. It followed on the heels of news on Wednesday that sales of previously owned homes fell in August. These data suggest that the surge in new home sales during the pandemic has ebbed, and inventories of unsold homes have risen to a more normal level in relation to sales, said Conrad de Quadros, senior economic advisor at Bren Capital in New York. This report and the existing home sales data for August suggest that a considerable portion of the flow adjustments of sales to high demand may have taken place. New home sales rose 1.5% to a seasonally adjusted annual rate of 740,000 units last month. July's sales pace was revised up 729,000 units from the previously reported peak of 708 units. Sales increased 6% in the populous South and gained 1.4% in the West. They soared 26.1% in the Northeast, but tumbled 31.1% in the Midwest. Economists polled by Reuters had forecast new home sales, which account for about 11.2% of US home sales, increased to a rate of 714,000 units. Sales decreased 24.3% on a year-on-year basis in August. They have struggled to post significant gains since surging to a rate of 993,000 units in January, which was the highest since the end of 2006. Builders have been constrained by higher prices for inputs as well as shortages of land and labor. About 78% of homes sold last month were either under construction or yet to be built. The report continues to highlight the ongoing difficulties that home builders are facing as they attempt to work through their current construction backlog due to a shortage of labor and elevated material costs and outright shortages, said Mark Pallam, Deputy Chief Economist at Fannie Mae in Washington. Stocks on Wall Street were trading lower as worries persisted about the spillover from debt-laden China Evergrande. The dollar slipped against a basket of currencies, US Treasury prices fell. So the demand has likely peaked. The coronavirus pandemic sparked an exodus from cities as Americans worked from home and took classes online. That boosted demand for bigger homes in the suburbs and other lower density areas, which far outpaced supply, causing bidding wars. But demand has likely peaked. The National Association of Realtors reported on Wednesday that sales of previously owned homes fell in August, with house prices continuing to moderate sharply after posting record increases in May. Some sellers are reducing their asking prices and consumer sentiment towards buying a home has shifted. Demand for housing could cool after the Federal Reserve said on Wednesday it would likely begin reducing its monthly bond purchases as soon as November, and signaled interest rate increases may follow more quickly than expected. Still, the fundamentals for the housing market remain strong. A tightening labor market is lifting wages. The new housing market remains underpinned by an acute shortage of previously owned homes. The median new house price shot up 20.1% in August to $390,000 from a year ago. Prices were unchanged on a monthly basis. Last month, new home sales remained concentrated in the $200,000 to $749,000 price range. Sales in the under $200,000 price bracket, the sought-after segment of the market, accounted for just 3% of transactions. There were 378,000 new homes on the market in August. That was the most since October 2008, up from 366,000 in July. Houses under construction made up 62.7% of the inventory, with homes yet to be built accounting for a record of 27.8%. The need to work through these backlogs should support new home construction in the months ahead, even if the pace of sales moves sideways, said Nancy Van Houten, a U.S. economist at Oxford Economics in New York. At At August sales pace, it would take 6.1 months to clear the supply of houses on the market, up from 6 months in July. So there we have it, everyone. You know, what's the discussion point on this one? So it still seems that housing, is slowing a little bit, but it's still going crazy in the US. I was literally watching a Dave Ramsey episode yesterday where someone was complaining that their house prices were going up because the builder was passing on construction costs to them. And it was all fair and reasonable what they were asking for, to be quite honest. Because steel is getting more expensive, lumber is getting more expensive, labor is getting more expensive. You've got supply issues, shipping of materials from overseas has just gone insane. Perfect time to build a house. Here in Australia, particularly in Queensland, it's no different. It's crazy right now. I'm struggling to get quotes from people. I sent a quote out for a painter to strip my house. It's taken so long to get back to me. I've hired the equipment and I'm up there doing it myself now. There you go. Fun and games. That's always an option. Build your own home. What do you reckon? Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the news and articles I find and cobble together here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for Self-Wealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy our merch from Heise Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time. Bye for now.